Alright boys, welcome back to the channel. It's great to have you. If you've never been here before, my name is Tyler Wilson and this is Option Drops. What I do is give you a speckle of information to improve your trading every single week. So if you're not subscribed, right now is the time to do it. Today in this episode of Option Drops, we're actually going to be covering my favorite 3 patterns when it comes to day trading. A little disclaimer: trading based on patterns, indicators are not a solid form of trading. I do not recommend trading on those bases. They can compound to make a really great trade when paired with actual knowledge behind trades, which I'll get into more content about, but I recommend implementing patterns and indicators into your trading. It can help you find key entries and exit for positions, which ultimately makes you and me money. Enough of an introduction. Run it, boys. These aren't so much patterns, more as things that I'm looking at on the chart to coincide with my indicators. Number 1 is going to be bull flags and bear flags. Basically the same thing, they just opposite directions. 2, we're going to look for double tops, double bottoms, things like that. And then number 3, we're going to look for higher lows and lower highs. Those are very key to spotting reversals and breakouts on the upside. I like to keep my videos between 6 and 7 minutes, so I'm going to go pretty fast with the content. So just play it back if you need to go over anything again. Let's get right into bull flags and bear flags. This is Peloton. We played this past week, and I want to go over exactly why I traded it and what I saw on the chart. Essentially, a bull flag is this exact pattern. You get upside and then you flag down in a channel like this at an angle, and then you break back up right here and you continue with your waves. Another key thing to know when you're looking at bull and bear flags, typically they retrace in an ABC pattern. So the idea is to actually buy on the C wave, right? So we get our A, B, C correction and then we pop back up. Theoretically, if we wanted to buy this next flag, if you will, here, which I would not buy this because it's overextended. The second flag is definitely overextended, and it came off of the rejection of our target. Our target was this resistance up here. We hit our resistance, then we came back down. It may have looked like a flag, but it was not. It was definitely overextended. With bull and bear flags, you're going to get more actual flag action going horizontal than going straight down like this, correct? So if we had a straight down shot like this, I would not have wanted to enter this trade, but we had some horizontal action, very smooth, not huge downside, broke back above the opens. It was a very solid trade. However, if we bring it over here, you see we never really broke the trend. If anything, we broke underneath it, and now we're showing more downside. However, I do like Peloton. I think we could potentially be double bottoming. We haven't made a new low. I'm going to show you it in the hour time frame on Peloton, but this is a bear flag. It's the same exact motion, only if the chart was inverted. So let's say this is our flag. This is the 1 hour chart, just so you know. It looks a little bit different. We're flagging this way. We topped off on Peloton, had some downside, trended sideways. It's an obvious flag in the higher time frames. Once we broke below the weekly open and out of the channel, it was clear that there was a lot of downside. This candle right here indicated that the flag was broken because we had a giant buy pressure, and then it sold off very, very quickly, and then we had immediate downside pressure. Now, bear flags and bull flags are not something I'm solely trading based on. I'm also watching key support and resistances, guys. I'm pairing them together. The next thing we're going to cover is double bottoms and double tops. I'm going to use a case of a double bottom because that's what we're trading Snapchat based on, along with our key support and resistances and how I think the market's going to move next week. I'm basically using these patterns on the chart to spot where I want to enter. Broke above a key resistance. I do not buy on giant buy pressure like this. I buy the retracement always. We had some really hard downside, and I figured we retest the key support, which we did. We hit here, hit again, and I figured I'd buy the second time. We double bottom about right here. On the larger scope of things, we also saw a double bottom right here, right? Those levels aren't exact, but they're very close for a double bottom. Typically, big wicks act as key support and resistances. So in theory, as we break above this resistance, my targets would be this 41.86 and the ultimate target 2, which would be about 43.20. If you're looking at this chart, there could be other areas for a double bottom. Yes, that's why patterns are so swing or miss, and that's why I pair them with my other trading methods. I can be more confident on my positions, right? So if you're looking here, you would say, Tyler, couldn't the double bottom be here? It could, but based on my trading methods, I wanted to hold at this level right here, and the fact that it bounced very quickly and had a small wick shows that this was a very, very key support and potentially, most likely, the double bottom. The next thing we're going to look at is higher lows. This is key for knowing if your stock still has momentum to keep running and if you should hold your position. I'm going to use Snapchat again because we get the exact movement we wanted at the close. We bounced from our open, came up, came back down, we hit a new high. I was a little bit concerned that we came back down, but if you look, we continued to make higher lows every single dip. So we made higher lows. We didn't even come down and test the support again, and we quickly moved back up to a higher high. If Snapchat would have came double bottom here, I wouldn't have been concerned, but if it broke below the monthly open, I would have quickly exited the trade because there's immediate downside to the trade. Again, guys, if you're watching these videos, I hope you're getting something out of it. I'm trying to make them very short, to the point, keep you guys engaged, as well as provide as much valuable content I can to you guys. I'm using real trades that I'm using throughout the week. Everything is live in the Discord. I'm giving updates about the TA as I go as well. I'm not trading solely based on TA. You have to remember that. I'm using a lump of everything that I use. Indicators, TA, how I feel about the NASDAQ, what I think about the news, how's the government playing, the dollar value, things like that. A lot more goes into it than just looking at a chart and drawing patterns. That is not what I suggest people trade on. That is going to wrap up the video for today. Not too much humor, but we'll be back. We'll be back, boys. Run it.